Hello everyone, here are the latest market news on October the 16th, 2020. Daimler beats profit predictions due to demand. Automaker Daimler on Thursday released better-than-expected third-quarter results, citing a faster market recovery and strong business in September. Earnings before interest and taxes in the third quarter reached €3.07 billion, $3.59 billion, beating Refinitiv's forecast of €2.14 billion. Company said they expect positive momentum to continue in the fourth quarter, provided there is no more coronavirus lockdown. The COVID-19 pandemic resulted in a drop in sales, causing the company to incur operating losses in the first and second quarters. Daimler said earlier this month that it would cut Mercedes-Benz fixed costs, capital expenditures, and research and development costs by more than 20% by 2025 as part of a strategy review aimed at further promoting the brand in the market. China continues to recover, Ford sales surge. China's economic recovery is likely to accelerate even further in the third quarter, breaking the record decline seen earlier this year. All because consumers returned to the malls and the business reopened. It is expected to grow 5.2% in July-September from a year earlier, up 3.2% in the second quarter. In September, car sales rose for the sixth month with a steady 12.8% growth. Ford Motor Co's sales in China jumped 25% last month from a year earlier. The COVID-19 pandemic, which caused China's first recession in the first quarter, is now under control. The government has taken a number of measures, including increased budget spending, tax breaks, lower loan rates, and reserve requirements for banks to revive the virus-stricken economy and support employment. On Monday, China is to publish data on GDP for the third quarter, as well as industrial production, retail sales, and investment in fixed assets for September. Morgan Stanley shows big profits despite forecasts. Morgan Stanley beat analyst expectations for Wall Street earnings and the confusion of profits in third quarter for the largest U.S. banks. Banks that were focused on trading were in positive territory, while retail banks were damaged by the pandemic. Morgan Stanley has benefited from a surge in financial markets. Customers have bought and sold securities in response to the coronavirus pandemic, and many companies have gone public or raised new capital. Company shares rose 1.5% to $51.40 in daytime trading. The bank's asset management division also posted a good quarter, with revenue growing 7% to $4.7 billion. Its return to equity, ROTCE, a measure of how well a bank uses shareholders' money to generate profit, was 15%, in line with the target that was set earlier this year. European stocks rise a little after Thursday. At the open on Friday, European stock markets are showing gains, partially recovering from sharp losses on Thursday. Profits may be fragile, however, as investors worried about the economic fallout from the second wave of the COVID-19 virus, as well as the ongoing Brexit negotiations. German DAX futures rose 0.1%, France CAC 40 futures added 1%, and UK FTSE 100 futures climbed 0.8%. European stocks on Thursday posted their biggest losses in more than 3 weeks, with the pan-European stocks Europe 600 having largely erased all of its October gains and fell the most since September 21st.